This is the Nifty Intraday video for 24th May 2013. In the last update, I was looking for the end point of wave C, and at that point what we had, what eventually developed was a triangular pattern, and triangles often occur in wave 4 structures. Therefore, after it formed, what I was looking for is a final move up in wave C, and somewhere close to, I think, 6020, I thought it was done. But what you see here is that even after that, what the structure that developed was again a triangular pattern. So we did not get a certain confirmation that it was done. I again changed the trend up to mark a move to closer to around 6030, and maybe higher to 6090, but really was not looking at a new high. So what we got then, and when I wrote the long short report, we had an expanding triangle in at the end of what I thought was wave C, and we did get a sell off. So it was looking like we are done there, and that's what markets do. They must get everybody on the wrong side, and someone must live to tell the tale. So what could have happened, that fall did look at that point of time as though it could have been 3 wave or 5 waves, so there was some subjectivity, but on the daily charts it looked like you had enough divergences and sell indicators that it could actually head lower. In hindsight, two possibilities are there. Either it was a 3 wave decline like I'm showing, because the 5th wave did not follow through to a lower level, or alternately, what looks like a 5 wave up to this point might have been an expanded flat. So what happens many times, we see a 5 wave decline, we think it may be the start of a trend, but it's if the high is surpassed, most probably that 5 is part of a C wave, and which is also a corrective pattern, typically in an expanded flat or a regular flat, and you get one more new high, which is what we've seen here, and that high has surpassed the 6112 January high. And the interesting part is that most sector indices and broader indices have actually not done that. So none of the underlying reasons that were there to look for a top changed, but we did get a new high on the index, which is something that we have rarely seen in years and years of market watching to this degree. Of course, during a bull market, sometimes one index leads and the others lag and eventually catch up. So you really need to get your bias right on the market to know whether that will happen or not. And at this point of time, when we look across charts, we still see ABC corrections, channel corrections on the way up, that continue to tell you that that might not be the case till there is sufficient evidence yet. So once again, I'm looking for the end point, and we probably made a wave C high a couple of days back, and I changed the trend to down, and we've got a pretty good sell-off. So question is, what is happening here? So let's get down to the immediate move. Now, either we mark this entire rise from the lows as a 5 wave, something I've discussed on the daily charts, if it's a part of an expanded C, or the end point is itself an expanding triangle. Visually it's pretty appealing, and it could be part of, so what we could end up having is that we completed C where we were thinking originally, and what we got in this triangulation is an X wave, and then we got followed by an expanding triangle in one more complex corrective. So this becomes a complex corrective with an expanding triangle at the end. Now what is important is that to retain a further bearish view, you need to be looking for two things. First is does the entire decline from the recent high develop into a 5 wave? Now in yesterday's Nifty Daily, I wrote that we've so far completed 3, and what we are looking for today is 4 and 5, and then we would know that we have a 5 wave decline on our hands. If this does not happen, then we would be forced to mark this entire setup as A, B and C. So we need the market to really fall below yesterday's low of 5955, or further below 5930 to sustain this move, and if that happens, then we are headed to 5800 in what would look like a larger 5 wave decline. Or maybe even if we get equality to wave 1 then we should be looking at a fifth wave which goes down to not that far, closer to 5900 in the immediate setup. But the reason I said 5500 is that if this is an expanding triangle, then classical pattern targeting is that you get an equal move below the head, and that targets closer to 5800. So what we are watching for today is this a fourth wave, and do we get a fifth, for which we should not go above 6030, this expanding neckline. And if we stay below 6030 and start heading below the 5955 5955 low that was there yesterday, then we have an impulse development which would be bearish from the medium term perspective. At the same time, after you complete a 5-wave decline, you are going to get a retracement back up 38%, 50%, 61%. It would be a wave 2 or B retracement. The chances of it being larger would exist. And the key to a larger downtrend would be you get a 5-wave decline and you do not surpass retracements and start heading down again. That would be the clearest indication that we did in fact complete what I'm calling wave Z at this high. Now the alternate scenario would be, what if you do get a 5-wave decline, and is it part of C, something I just discussed? Is this A, B and C? My sense is that wave B is big, very big. It's gone a little above 1.618 times, so this would not be a preferred case. And once you do get a 5-wave decline, my sense would be that we are into a medium term or a larger downward trend. And what you would get to test that opinion would be a good retracement and a failure subsequent to that, and that would really tell you that this is true. If it does not fail from a retracement and continues higher, then that would be a sign that bullish alternates are still on. So for extremely short-term traders, the levels to watch for today would be this neckline as a resistance 6030. Break below the 5950 mark for a fifth wave, which can go to either 5900 or stretch all the way to 5800 before you get a wave 2 or wave B bounce back. That's all in this update for today. Thank you.